Are we in another bubble? Are we about to see a repeat of 2008? Remember the dot-com bust? Are we about to see an AI data center pop? Let's watch this clip and we'll get Michael Weiner to respond. Watch this.
One of the people who made his name during the financial crisis.
Yeah, Michael Burry, the hedge fund manager who called out that 2007 financial crisis and the collapse of the U.S. housing market back in 2007, has now put a sour note on this AI trade, perhaps one of the biggest calls on this bubble risk that we've gotten so far that kind of puts a little realness to what could happen over the next few years. And so what happened overnight was his hedge fund manager, Michael Burry, bought put options on 1 million shares of NVIDIA and 5 million shares of Palantir. And just to understand how much exactly that is, 1 million shares would be about a valuation of $187 million. And those 5 million shares of Palantir, well, that equates to about $912 million. And so a pretty significant bet here that Michael Burry is making on both of these companies, as all we've been talking about was the valuation of both of these key players within this AI arms race. And yesterday after market close, he went on to X and he shared a pretty interesting post. He basically pointed out one or a few charts, but one in particular was about the cloud revenue segments for Amazon, Alphabet, and Microsoft. And what he pointed out was that during the years of 2018 to 2022, we saw returns of 36%, 45%, and 22% for these three companies. And over the past few years, the return on both of those, or rather all three of those cloud segment revenue, has been significantly lower. And what he said with this graphic that you're seeing now on the screen was, these are not the charts you're looking for. You can go about your business. And this was after this filing had come out. This was based on a regulatory filing that for the quarter that ended September 30th. And so we're now just getting it. And it's definitely causing a bit of fear among investors this morning.
Yeah, definitely. Even though it's all sort of hints and insinuations. He's not coming out with sort of a long screed on all of this. He just dropped those things that you talked about. Now, we are also at the same time, just coincidentally, getting some commentary from big asset managers who were at a conference in Hong Kong, and they're also talking about valuations.
Yeah, at this financial summit, we heard from Goldman Sachs CEO David Solomon. We also heard from Morgan Stanley CEO Ted Pick. And what they said essentially was that these evaluations are pretty significantly high right now, and we could be seeing a pullback. So specifically, Morgan Stanley CEO Ted Pick saying we should also welcome the possibility that there would be 10 to 15% drawdowns that are not driven by some sort of macro cliff effect, calling that a healthy development. Goldman Sachs CEO David Solomon sort of echoed that. But we've heard from so many executives that investors should right now sort of brace for a potential market drop of about 10% over the next 12 to 24 months.
Oh, wow. The horrors of it. A 10% correction over 2 years. I mean, really? I mean, why are we even talking about this? Markets go up, markets go down. Is that really the popping of a bubble? Michael, it sounds like, I don't know. I have a hard time believing all the money being dumped into data centers and AI is only going to see a 10% correction. But I don't know, maybe the government contracts a lot of these companies get, it doesn't matter. But I go back to the chart that was shown there. The cloud segment growth, 2018 to 2022, 36%, 45%, 22%. But 2023 to 2025, the average was 17, 29, and 20. I mean, anytime, I remember one well-known economist saying, anytime you're averaging 7 or 8% consistently, you're a pretty good investor. When did it become commonplace that you have to make 17, 36, 45, or 22% return? Why wouldn't people be happy with 17, 29, or even 20% return? It seems like something is not right here. In the markets, number one, I don't think this is sustainable, all this money, unless, again, it's government-driven money. But number two, the mentality of people that they think that all of their stocks, or at least the ones in the tech industry, should be performing at these levels. It doesn't sound like we have a generation of young investors coming up that have a whole lot of understanding of economics or a grasp on reality. That if you're in something that's doing 10, 11% a year consistent, they think you're in a losing asset. You need to be in something that's doing, 36, 45% return. This doesn't bode well for the younger generation, does it?
Well, this whole situation is something of a bubble. I think, and we've talked about this in the past, that this bubble has been going on now for the last 3 years. We've had a market that's been sustainably going on and going up since Trump got in office. A little bit of a nick when it happened in the pandemic, but then came right back and started going up and up and up and up and up without any foundational base. That's the whole problem. Foundation. What's the foundation here? This is similar not only to 2008 in the housing market, but it's also similar to the dot-com era. The United States inherently makes a huge mistake overpricing things and overinvesting in things. AI is a hot item, but it doesn't mean you have to go nuts. And they're going nuts right now, putting money into it, and it's not sustainable. The stock market is not sustainable right now. There's going to be a correction. I believe there's even a bigger issue. I think that 10 to 20% correction has always been due because it just kept going on. We watched it from 30,000 to 35,000 to 40,000, conversations of 50,000. The big issue here right now is why? Other than investing, you talk about the young generation, they're all gamblers. They're wheelers and dealers. They're crypto people. These people are not concerned with owning stock. They want to buy mutual funds where people are not owning stock. They are betting on the price every day. That's what that guy did with this huge investment. It's not his money. He's not buying the stock. He's betting on it through funds or ETFs. The bottom of this whole thing is a double entendre. Number one, I think Trump is going to lose that tariff situation. I think they're bracing us for that right now.
So he's going to lose at the Supreme Court. A lot of the justices seem very skeptical.
I think he's going to lose.
And what will that mean? Will they make him pay all that money back or say stop it going forward?
God. Oh my goodness. It's a mess. Physically, it's a mess. I mean, the connections there are astronomical. First of all, the increase of debt. We're already in debt, but we're going to have to give back almost $1 trillion of revenue. We're going to have bonds that the United States government puts out chasing no buyers.
Wait a minute, let me slow down for the average person. If the Supreme Court says he does not have these emergency powers, once he takes them from Congress can't get them back. That's the concern that I heard from some of the justices. So you can't take these powers, these emergency powers, and from Congress and then give them back. So if he's going to take them, this is setting a precedent. And it doesn't sound like the justices felt like this was within the constitutional framework that they were reading from. If that's the case, will they make them give back the money, or will they say going forward from here on? Do you know on that, first of all?
We don't. The reality is there's no middle ground on this. That's the problem. Either the tariffs are good or the tariffs aren't good. As far as the decision of that all is, they have to, a lot of people think it's great. You've got the people on the other side right now. Do I think they should have had some heavy thought before they did it? I think Trump went into it because he felt empowered from 2016 when he used tariffs and nobody did anything. Now they're doing something, and the problem is homework should have been done. It's a little late. I mean, the surgery's been done.
So if you have to pay the money back, about $1 trillion, you're saying the government will have to create bonds, print the money and create bonds to sell
without the demand.
And no one's going to want to buy these bonds.
Correct.
So
why would you?
Yeah. So what happens? What happens?
A mess.
What does that mean?
15, 20, I'm going to tell you, there's several things. First of all, let's talk about companies that are in business. They use the supply chain as a means of running their business. How are they going to be able to document their plans when they've already adjusted for the tariffs and the additional costs, the expense, the revenue, outlays, deliveries, and now everything goes back again. Now they have to change all that. That's going to create a retail disaster. Then we're also going to talk about the renegotiating all the deals, literally how the supply chain is going to be going to us as a country is going to be a total mess. The stock market, I think, will go through a huge uncertainty. And I think you're talking, instead of 15 to 20%, you could see 30% drop. It could get really bad. And
In fact, we have a clip in from the White House. I believe this is from today. Yep, this is from today. Listen to President Trump. He was just asked about it.
Those issues are ruling. It could be several weeks. Are you going to lay out any new additional tariffs before?
I don't want to talk about it. I'm going to hope that we win. I can't imagine that anybody would do that kind of devastation to our country. You know, we'd have to pay back trillions of dollars. We've taken in trillions. We haven't taken in billions. We've taken in trillions of dollars. We've made trade deals based on that give us, as an example, European Union, $950 billion. Japan, $650 billion. South Korea, $350 billion. Without this, we're not talking about that kind of money. And they're okay. They're satisfied. They love us. I just left. They all love us. So it's not like we're such bad people. But they were doing it to us until I came along.
Wow. He said trillions, Michael.
Right now, the number is 750 million to a trillion that they took in officially. Maybe the other dollars haven't come into the framework yet, but the numbers that Politico is putting out is 750 to a trillion, and I trust their numbers. But there's a lot of uncollected funds as of yet, too, that maybe that's what he's referring to. But as he's talking about, this is going to be a disaster, because it's almost like saying you got married and now you're invalidating the marriage and you've already consummated it. I mean, literally, it is a mess. And the mess implications go to the retail side. The mess implications goes to the dollar, which will be a total disaster. The mess implications will go to the credibility of us foreign policy-wise, geopolitically, and financially. We're going to be literally chasing money and increasing debt, and it's going to be like almost like a sale in after Christmas when all the people jam into the stores. You're going to see people running out various different doors. You're going to see the stock market. You could see 1,000-point drops for several days, literally going on from this.
In fact, I guess they're saying in the court rulings, in the court, the papers that were being argued, that the DOJ was arguing that they would have to return the money.
They do. They have to return the money. And it's not a matter of if, it's not a matter of when. They have to return the money. And they're going to have to figure out where to get it from. And we're going to be in debt from that. They're going to have to print more dollars. They're going to be chasing dollars. They're going to be putting off bonds. They're going to be selling our debt. Our rate debt and the U.S. dollar will tumble. There's going to.
Well, look at this. This was in the case being argued yesterday. The general, I guess the General Sauer, S-A-U-E-R, was arguing it. The empirical estimates range from like 30% to 80% of like how much is borne by Americans. What? Haven't we been paying more in cost because of the tariffs? And now on top of that, we're going to be taxed to pay back the tariffs?
It's a double dip. It's a nightmare. And, when you see what happened at the election with all these communists coming in, boy, it makes them look so sweet right now, because people are sitting back and going, I'm suffering and all the rest of that stuff. And then you're sitting back and let's talk about the housing market. Do you think it's going to make it better? America will continue to be rich enough to win. Our children who went out to buy homes, and I'm talking about the generation now, they don't have the money to buy a starter home unless they move to a state they don't want to live in. And that's the big issue. You can say, okay, well, go to Arkansas. How many people want to move to Arkansas? I'm not saying anything bad about Arkansas. I like Arkansas. But I'm just saying these people want to live in New York City. They want to live in Miami, want to go up, and they don't have the money to buy the homes. The American dream is changing. That's why this is going on. And this is going to fuel the fire. And this could legitimately lead to a guaranteed victory by the Democrats.
Well, you bring up a very good point. You bring up a very good point, Mr. Weiner, because they're going to say that Trump doesn't know what he's doing, and he went ahead and did something without really being sure of himself and, legally. and look at this mess and look how much you're paying for more stuff now and inflation, because they're going to have to print the money or create it somewhere to pay it back. And then that's, of course, a hidden tax. So look, Donald Trump's capitalism has failed. That will be the narrative going into 2026. Capitalism doesn't work. It failed. Trump and his family, their net worth has increased during the time he was president, and even in the first 10 months, 11 months of his being president. They're going to point to all these different reports about stable coins and all the money being made, and they're going to say that capitalism is not compatible with a free society, that it's failed. We should all acknowledge that. And they're going to offer all the free stuff, which is socialism. And I go back to what I'm saying, been saying. What we have today is not capitalism. This is not free market capitalism. We haven't operated under free market capitalism since 1913, when they put in the Federal Reserve and didn't let the markets care for itself, but started creating artificial maneuvers by a central bank. And of course, then you got the federal income tax, which was stealing from one to give to another and expand the Great Society with Lyndon Johnson and FDR and others. I mean, we're not a capitalist free market system. So I think people ought to be prepared to explain to their children and grandchildren, they're blaming capitalism, but we really haven't had capitalism in the country for many years. But they're gonna do that, and watch how they win in 2026 with the pain of more inflation. True or false?
It's true, and the bad news is them winning. It's really false that their whole idea of socialism is better, because they don't give you anything. That's own
exactly
everything.
Right. That's right.
It's a bunch of garbage. It's just real simple for little kids out there.
They'll be inflating the dollars. They'll be inflating with taxes. They'll be stealing with more taxes and inflating more currencies if they win and can get the printing presses going in 2028. And I'm thinking that Trump's own Treasury Department will have to also go to quantitative easing. But even if the next administration is what we're talking about, and Trump's administration tries to hold down the quantitative easing, the printing of money, New York's going to increase taxes. Okay. And so you're going to damage the people that make the money, who go to the restaurants, who buy the nice meals. You're going to damage the producer, and they're going to leave. Then it's going to, and I'm sorry, it will trickle down. People won't be going to the nice restaurants, and the waiter and waitress who was making a pretty good living serving high-end middle class to upper class clientele, they won't be making those tips anymore. The tourists won't be coming in there. He's going to soak people that have the money, and they're not going to go. And the people that will be hurt will be the lower class. And we know that these free grocery stores don't last. They don't work. They had one in Kansas. And I have a clip of that. And it's the shelves are bare. It didn't work.
The truth to it all is they want you to leave. Mandani wants to be left with only the people that agree with him there. So he wants the losers. He wants the people who are the good people to leave, so he can have a bunch of people that are left saying, you're right, you've done all this stuff for us. Yes, you gave me an apartment. 3 years from now, you're going to find out you don't have an apartment. They do. It's all about control, and it's all garbage. It's a horrible situation that we're in. If the Supreme Court allows this to go in this manner, not only is this a situation where the Democrats will be dancing in the street, and also the ultra rich will be dancing in the street, but also understand that the middle class, upper middle class people are going to suffer. And additionally, the Democrats are going to use this not only to win in 2026, but they're going to impeach Trump day one that they take over. And it's going to be a mess all the way to the 2028 election. And they're going to blame all of this on the Republicans, and they're going to try to take over the country and say goodbye to America.
Look at this. Here is an ABC on the free grocery store in Kansas before I play a clip from yesterday's arguments at the Supreme Court. Look at how this free grocery store worked out. Nothing's free, by the way.
For months, the store hasn't fully been stocked. Still, person after person comes to buy groceries.
I thank the previous operator for the years they put into that, as well as their predecessor. And now we'll try to do all we can to make sure that this works.
Mayor Quinton Lucas is disappointed. He met with the store operator 2 weeks ago for hours trying to come up with a solution.
Yeah, I know there are different challenges to how a grocery store can operate. Part of that challenge is that the city certainly has been happy to be a partner, but there's always a limit to what we will invest as well.
It comes down to money. The city owns the building and has invested nearly $29 million in the store. Still, the Sunfresh was losing money.
All of a sudden, you roll down here this morning and they're gone, and they're saying they're not coming back.
All neighbors know is there's no food here now, and they wish that wasn't the case.
I'd like to know what could be done, maybe to bring it back.
In Kansas City, Brian Johnson, KMBC 9 News.
So a grocery store owned in part by the government, a city-owned grocery store in Kansas City shuts down after nearly $29 million from the city had been invested to keep it open. A taxpayer-funded grocery store. Here's another clip. Watch this one. Here we go.
Clear this Sunfresh at 31st and Prospect is struggling. This is the first section people see when they come in. There's barely any produce. A lot of the coolers and shelves around the store look the same way, empty. So shoppers have been asking us, if the store isn't closing, then where's all the food? A rotten smell comes through the door, and anywhere you turn, you'll see products that need to be restocked. No hot food or deli.
I watch people walk in and walk out.
The grocery store has received financial assistance from the city, but has been unable to keep those shelves stocked in an area that in the past has often been referred to as a food desert.
Yeah. Well, when you don't have a profit motive, then who is going to want to work with that store? Who's going to want to sell that store? Make sure they're getting their bills paid. It's losing money. I guess it was being funded by the government. But when there's no profit motive, a reasonable profit, then the whole thing collapses because you have to have a motivation for people to want to succeed. And when there's no profit, why would you want to mess with a store like that? How many people weren't getting paid? If it's having financial trouble, how many vendors weren't being paid? And how many vendors finally said, we're not selling to you? So the question would be, they should be reporting on is, why are the shelves empty? Okay. Why are the shelves empty? People are coming there wanting food, apparently, at a greatly discounted price, but why are the shelves empty? But the question would be, is it because the people that were selling the food to the grocery store were not being paid? Were they trying to buy it from them at a price where there's no profit for them, so there's no incentive for them to sell it to the grocery store? I mean, you really need someone to do a story on why the shelves are empty. And once you take away a profit motive, you got a problem.
Absolutely. This is where capitalism works. I mean, you can't have a business that is not run by somebody who wants to make a profit. Because if you don't, then you have this type of a mess, everything free. If you remember, and you're too young, Brandon, I go back prehistorically, but at the end of the day, back in Reagan's day, and when Russia went under, it's because their shelves were empty. They did a 60-minute piece about going into Russia and seeing people in line just to buy bread that wasn't there, just to get other items that wasn't there. And this is why it sounds so good to the people who are short with the funds right now to hear a guy like Mondani, that piece of communist whatever, who sits back and promises everything, some of which he can't give, but it sounds really great to a person who's struggling paycheck to paycheck and actually going under, that the government's going to give me this, the government, and they're just going to take away from all the rich people. The rich people, in my opinion, are anybody that has money. I hate when they say the rich, because when it comes down to taxes, if you have money, if you've been responsible, you will be punished, literally.
Yep.
And the only way to make it through this mess right now is be one-dimensional and shore up. It's like Worldview Weekend talks about all the time. Prepare ahead with freeze-dry food, other things. It's the same thing with gold. We talk about people and you're lethargic right now and your brokers are telling you everything is wonderful. It was all wonderful in 2008 until the day the rug got pulled out from under you.
That's right.
And there's no forewarning by these people. The rug just gets pulled out from under you. So we're sitting here forewarning you.
Yep. Look at this chart. This is a very interesting chart. This is showing the S&P 500. That's in black. Keeps going up. And then total job openings. That's in blue. Going down. Okay. Notice the time frame. Okay, we see the 2020 pandemic there. Total job openings, a crater. Businesses are being closed, grocery store, restaurants being closed, smaller grocery stores being closed. The big box stores got permission to stay open. Then you see the economy open back up and get going again in 2021 into 2022. And then you come up there to, 2023, and it really starts going down here into 2025. Now, the S&P, though, keeps going up, up, up. Jobs going down, down, down. The question is, why is the S&P going up? What this tells me is a lot of this is artificial. It's what Alan Greenspan called irrational exuberance. Number one, possibly, right? Number two, is it profits because more and more people are being laid off and fired and AI is taking over more and more jobs? I don't know the question, but that might play into it as well. But I wonder if this S&P going up is because these earnings aren't based in reality. I'm not sure I buy them. I'm not sure I buy. That's why I don't play the stock market. I don't trust the reporting from the corporations. Do you?
Not at all. Paper assets are what they are. They can make them worth what pick a number. It's almost like pick a number. We'll give you one. And they can sit back and make it. And then we get these readjustments later to everything. It's even what was going on under the Biden administration and the readjustments. Then we found out with Trump that there was readjustments on the job side. We've got to sit back at this point of time and be one-dimensional ourselves individually to protect ourselves through this mess. And you would think that the Supreme Court would have some sense of responsibility, not just looking at this constitutionally, but also looking at this as for our government.
Well, listen to what Amy Coney Barrett said. Here's what Amy Coney Barrett said yesterday. Listen to this.
And then if you win, tell me how the reimbursement process would work. Would it be a complete mess? I mean, you're saying before the government promised reimbursement, and now you're saying, well, that's rich. But how would this work? It seems to me like it could be a mess.
So the first thing I'd say is that just underscores just how major a question this is. The very fact that you were dealing with this with quotas, there's no refund process to the tunes of billions of dollars or embargoes, but there is here. But for our case, the way it would work is, in this case, the government stipulated for the 5 plaintiffs that they would get the refunds. So for us, that's how it would work. Your question, I take it, is about everyone else. We don't have a class action or anything like that. With respect to everyone else, there's a whole specialized body of trade law, and it's in 19 U.S.C. 1514 outlines all these administrative procedures. It's a very complicated thing. There's got to be an administrative protest. There was a harbor management case earlier that this court was involved with in the United States Shoe, in which the refund process took a long time. There were any number of claims and equitable relief.
So a mess.
So it's difficult, absolutely. We don't deny that it's difficult, but I think what this court has said in the McKesson case in 1990 is that serious economic dislocation isn't a reason to do something. Northern Pipeline, you guys stayed your decision for a while in order to let the congressional process unfold. There may be a congressional process here as well. You may be able to also be that this court could limit its decision to prospective relief under the John Q. Hammonds cases.
He said mess.
Yep, it's a mess. I mean, it's an absolute mess, and everybody's asleep at the wheel. It's like we sit here and we warn people, and it's almost like months ago, I almost think last year, we had that show about Twilight Zone when everybody was sitting back saying getting fallout shelters, and then one guy did, and everybody used to laugh at him until the day the bomb was dropping, and then everybody was trying to break into his bomb shelter. Reality is, this is a period of time where you better be paying attention to your assets and trying to do something logical, and that is, like my grandfather used to say, when you don't trust who's cooking dinner, don't eat. Put things in your control. If you don't put things in your control, you're a fool right now. You would think to yourself, in what world would somebody want to create this destruction? Couldn't something be planned through rather than pull the rug out from under you? And right now, you cannot have a partial settlement. It can't be done. It's either all or nothing in this. They can't say, well, tariffs were good up until today, but after today, it's not good. It's not retroactive. That's going to be challenged because you can't say it's good today and not yesterday. This goes back to the inception. So it's a
let's
real
go to
mess.
this article. BRICS, Brazil, Russia, India, China, South Africa, and those that are with them, dump $47 billion in U.S. treasuries. I read an article there the other day. China and Russia are basically done using the dollar. So who's buying our debt? Who's buying our debt? And that's what they knew was coming along, and they knew that was going to happen as they used the U.S. dollar to sanction people, weaponize the dollar. So these countries started organizing. They dumped the dollar, and so now we need people to buy bonds to fund our debt. So we have the what was it called? That big act. What was it called? Sounded all nice and everything. The Genius Act. The Genius Act, and that now allows people to buy stable coins backed by bonds. So it was really just a way to get people to buy bonds because nobody else really wanted them, right?
Exactly. And the debt becomes circular. When we sit back and say, who's going to buy our debt? Do we actually track it? We could be buying our debt back ourselves. We could be playing a circular game ourselves, running in circulars, almost like somebody who has credit cards. And when they owe on one, they get another. And when they owe on that one, they get another. When they owe on that one, they get another. And when they get, I wonder, really, has anybody checked? Are we not maybe doing that ourselves right now? We don't know. We don't know. And we very well could be doing that because China and other countries are not jumping into our debt at all. Zero.
So who is buying our debt is the big question.
And again, well, first of all, there is some nations outside that are buying our debt, maybe through Japan and South Korea and other countries. But I believe it's being we're doing it. I believe we're doing it in-house. I believe we are circling the wagons, and one hand goes to the other hand, goes to the other hand, and we don't know. It's a shell game, literally. And that's why, when Trump says we're literally getting rid of debt, my question is how? Okay, show me.
I'm also reading that banks are having liquidity issues and that there's something going on with the repo market, those short overnight, short-term loans. That also is an indication a lot of times of liquidity problems for banks. What are you hearing about that?
Hearing the same thing. Repo market was a big place. Actually, big money people usually love repos because you get paid some decent money overnight, called overnights too. And we're finding that there's shortages there on one side and the other. And we're finding a lot of banks that are caught up in that, and also derivatives, which is another black hole, but nobody ever talks about it. The derivative market is so huge that they don't even bring it up. And again, it's another circular wagon, one hand to another. And the repo market is not secure. And the banks that are tied into it are legitimately being shortfalled time after time. And other people are picking it up. And they're literally making usurious type money to cover the, in other words, they're charging a lot of interest to cover the repo marketplace. So somebody's making a ton of money and we're losing.
All right. Well, what this really means is there's going to be more inflation, right? They have to print more money. They have to release more money. So It's going to create more inflation, which means that's a hidden tax. That means it chews in on your purchasing power, which means it takes more dollars to buy things, which means it's chewing up your savings unless you're getting a good return on your investments. I want to talk about the housing market, but first, you want to get a free no obligation packet. Just call that number 1-877-864-1072, 1-877-864-1072, or go to worldviewgold.com and fill out the form, worldviewgold.com, or 1-877-864-1072. All right, let's talk about housing market. I have an article over on my website today, if I can find it real quick, about home builders offering really lower interest. Here it is, found it, Wall Street Journal. Builders are offering mortgage rate discounts. Home buyers aren't biting. New homes are sitting unsold despite builders using sweeteners to shift inventory. America's biggest builders are struggling to sell homes even when they offer buyers a 4% mortgage. Their experience suggests rate cuts alone won't be enough to boost weak sales in the wider housing market. That's what the gentleman that was on here the other day talking about the housing crisis that's coming and the bond markets, what he says are fraudulent. Mix Vexler was talking about the fraudulent school bond market. He was saying, you can lower the interest rates. This is not going to cause people to come jumping in and buying houses. And now here's the Wall Street Journal. And that's because the prices are just too high relative also to their income. So you have inflation, but the income is not keeping up with the inflation, correct?
Absolutely. And they just don't have the money. I mean, you could sit back and offer somebody a low rate mortgage, but at the end of the day, they've got to come up where you used to buy a house and buy a house for 150, 125, 190,000. You could come up with $30,000, $40,000 and buy a house. You can't do that now. You've got to have a couple $100,000 to buy a house. How many young couples have saved $200,000 to buy a house? They either have to borrow it from their parents, or they legitimately need to rent because they have no choice. They can rent that nice place and then sit back and live there without having to put up the money. That's why some companies like BlackRock and the rest of them are going in and buying these homes, but they're buying them dirt cheap. They're not paying the regular price. So as I said, America is becoming rich enough to rent. And then you got these lunatics running around saying, we're going to get you rent control. You can't do that in a society where people are trying to make a living building and selling homes.
That would get struck down by the courts, I would think, right?
Yep. Correct. And this whole thing right now, I don't see any solution in the immediate future until there is a cleansing of this overpriced marketplace, like the gentleman who came out and talked about property taxes and all the other games that go on. I mean, in all due respect, California, you'd have to be nuts to want to live there. I mean, I lived there and I bought a home there and I know what I paid in the 80s for that house and I know what I sold it for, some ridiculous number. But to look at right now and say to yourself, I'm a first-time buyer in California and I don't want to live in Watts. So I'm going to buy a house, let's say in Gardenia or something like that, which is a 1,200 square foot or 1,100 square foot, 2-bedroom home with 1 bathroom, and I'm going to pay $900,000 for it. I kid you not. That's insanity. Who wants to do that? You're better off to rent. At least you get a decent place for what your payment is. That's what it comes down to.
So there you go. I don't give financial advice. I give financial opinion. You should brace for what's coming. You should have your portfolio stabilized with something that offsets inflation and the chewing up of purchasing power. And I think that's what we're going to continue to see. I think we're going to continue to see inflation. I think we're still on track. Gold's had a little bit of a correction. Silver has as well. But what?
That's a great time to buy. Wake up. Buy it for less rather than more.
I mean, why would it not keep going up? I mean, if they're going to keep printing money and inflation is going to keep going, why would it not keep going up?
Inflation goes down, the housing market picks up, the job market picks up. There's things at hand right now, and plus the other that aren't going to make that happen. And then in the other situation, gold is money. The rest of the world the negative side of the gold market would be the world going to another type of currency. And the issue is that they are going digital, but China and the rest of them are using gold within their economies. So it's a double-edged sword for gold. Right now, under this administration, and even if the Democrats get in, we're on an upward trend, but in deference to the stock market, and I said this on a show, Brandon, in August and in the early part of September, we need a healthy market. A healthy market has corrections. If it doesn't have corrections, you're going to take a hit. Yep. Literally. You got an opportunity.
1-877-864-1072 to get the free no obligation packet or worldviewgold.com. All right, great visit tonight. Great information. Thank you, Michael.
Good night, Dolly, wherever you are.
She's on her bed. She's on her bed, fast asleep. Can we not get a shot of Dolly, Logan? No, we can't get a shot of Dolly. Just trust me. She's laying on her side, fast asleep. All right.
All right.
Thank you,
Good
Michael.
night.